Hey, Bulls and Bears, happy New Year's Eve and maybe Happy New Year if you're watching this on Sunday, January 1st, 2023. I'm actually recording this on New Year's Eve, December 31st, 2022. It's a little bit later in the evening, so I'll say Happy New Year's Day to those watching on Sunday, January 1st. How's everybody doing? Hope everyone's well. Let's get right into it. Rents are dropping. And yes, they do drop every year, but this is much bigger than what we've seen over the past several years. And this was bound to happen when savings reaches the basement, basically, US savings rate, which is how much money people have left over in their savings account, checking account at the end of the month after paying all their monthly living expenses. Now, some people have said, well, no, people are pulling money out of the bank, so they're not keeping it in the bank, so that's why the savings rate is low. That's actually not, it's not how it's calculated. They don't add up all the deposits and see in everybody's checking or savings account. They don't do it like that. What they do is they look at incomes versus monthly expenses and how much left over at the end of the month the typical household has. So when we say the savings rate has plunged, we're in financial crisis territory, which was one of the things that led up to the financial crisis. Of course, we had the implosion of the subprime mortgage market. But in combination with that, people were going broke. They were spending more than they were taking in. It just happened to be everything hit all at once. So 2023 is definitely going to be an interesting year. And we're seeing the trends that match the situation here with savings being so low. Rents are bound to drop. Remember, rents are more indicative of how much money people have disposable at the end of each month, not people that can take out loans. When home prices go up, you see just debt climb, or home prices go up because debt climbs, mortgage debt. So when people borrow money to buy homes that they normally couldn't buy, that pushes the prices up. So low interest rates. Rental, not so much because you're not borrowing money to pay rent, or it's rare that you would do that, right? Some people take out credit card advances, which is bad news because of interest rate. But here's what's going on. This is out of Apartment List. Now, they've been keeping track of rents since 2017. So we go back 5 years. This is the biggest 3-month decline. The national rent index fell 1% over the course of November. That was the third straight month-over-month decline. That's the largest single-month drop in the history of the index, which goes back to 2017. Okay, so you may say 1%. That's not very much. No big deal. Well, it's not very much by itself, but imagine if that happens every month. You're down 12% for the year, down 25%, close to 25% in 2 years. And remember, on the way down, price drops are more significant than on the way up. And a couple of you were asking about that. Let me just break it down in simple numbers here. So let's say that prices go up 100%. Let's say the median rent's $1,000 and it doubles. It goes up 100%, which would be $2,000. So it goes from $1,000 to $2,000. That's a 100% gain. It doubled. Simple, right? Now, if the price drops 50% from 2,000, you're back down to 1,000. So it was a 100% gain on the way up, but only a 50% drop on the way down to get you back to the same place where you started, which is 1,000. So these price drops are more significant on the way down, but it's happening now for several months in a row. And this is the largest drop in many, many years, according to the Apartment List Index, Apartment List. And there's a few different things at play here. We've got some cities, some states finally ending the protections that were in place for renters. Okay, so that's part of it. So now more people moving out of these apartments, homes, combination of the both equals more supply. So now we're seeing the biggest drop that we've seen, and the vacancy rate also has taken the biggest increase that we've seen in many years. Now, going into the health crisis in 2020, the vacancy rate was about 7.2%. Most of us know what happened after that. Things got really tight in both the housing market and the rental market. And we saw a drop down to about 4.1% vacancy rate. So we're up to almost 6% now. We're up to 5.7%. But the increase from the low that we saw at about late 2021 to where we are now is a record increase in the vacancy rate since this data has been collected via Apartment List. And it's only 2017. But we are seeing a change, a shift in the rental market. Now let's get into the cities that saw the biggest drop. This is just looking back 6 months. Las Vegas down 3%. Riverside, that's an inland empire here in California, down 3%. New Orleans down 2%. Providence, Rhode Island, 2%. Sacramento, California, also down 2%. Phoenix, Arizona, and Detroit, Michigan, also both down 2%. This is just in 6 months. Seattle down 1%, Tampa 1%, San Francisco 1%. Now, this goes back 6 months. Now, during some of those summer months that this includes, June, July, and August, rents were still going up. But now here over the past 3 months, we've seen the drop accelerate. It's bigger than the typical seasonal drop in rents. So you let me know, what are we going to see in 2023? Are we going to see a big correction in the rental market like we are in the housing market? They're talking about keeping rates where they are and possibly even going higher in 2023. So that's going to have a lot more people continue to be priced out of the housing market unless we see a huge correction in home prices. But with the higher interest rates and mortgage rates, we're going to need to see a much bigger correction in home prices for people that can't afford to buy now to be able to afford. Because right now, the drop in home prices doesn't match the raise or the rise in mortgage rates. People are still priced out even with lower home prices, unfortunately. All right, so we're going to see how this plays out. You would think that with so many people priced out of the housing market, that rents would actually be going up instead of down. So we'll see how this plays out in 2023. If both come down, it's going to be very interesting to say the least. But let's shift topics here a little bit. Still on the topic, though, of rentals. Downtown San Diego residents wanting to break leases because of the homeless crisis. So these people walk right outside their apartment, right outside their door, and they're immediately confronted with homeless people, sometimes tents right on the sidewalk. Pretty interesting. So now they're asking the landlord, in this case, to break the lease. So we'll see how that goes. For some people living in downtown, the situation has gotten so bad they want to leave the area and are willing to break their leases. So they're willing, in some cases, to pay the penalty for breaking their lease. I'm sure some of them are asking the landlord not to hold that against them because it's an undesirable place to live. But if it wasn't in the lease agreement, you're very unlikely to find a landlord that's going to let you slide and break your lease, because unless you put something in the lease agreement that says, okay, if a bunch of tents pop up, you don't have to continue through the end of your lease. I've never seen a rental contract or a lease that included that verbiage. Some people say they're simply tired of dealing with it every time they walk outside their door and want a way out of their leases. And while to them it may seem like they're stuck, one legal expert says that's not entirely the case. So they're going to have to get lawyers and get their legal representation for these leases. But on the topic of protections, new protections could be coming for San Diego renters. So here we go. This is going to stop rents from falling and make rents, continue to be unaffordable here in San Diego if this happens here. San Diego mayor announced a new proposal that would enhance protections for renters and provide clarity for landlords with the goal of preventing more people from becoming homeless. So when you have people that are occupying a home or an apartment that can't make the payment, that's an apartment that's not going to be available for someone that can make the quote from this article: due to the high cost of living, more people are falling into homelessness in recent years than in years prior. So what are they doing to fix the problem of the cost of living and rents being too high? Well, they're making rents stay high, because now these protections in place are going to have people occupying a home that they're not paying for, when normally that would have become a vacant residence for someone to come in and rent, and they may have had to drop the rent to get someone in there that can actually afford it. So now they're adding fuel to the fire. Instead of fixing the problem, they're making it worse. And this is typically what we see with a lot of these programs and intervention and what they call protections. It usually makes things worse. So that's just a small example of a broad economic picture in 2023. Things are likely to get much worse. The more they come in and try to help, it's fuel to the fire, right? So buckle up, folks. 2023 is going to be a doozy. Hope everyone's having a safe and warm and comfy New Year's Eve / New Year's Day. Again, if you're watching this on Sunday, thanks everybody for another year of keeping this channel alive. All right, folks, we're going to wrap this one up here. Happy New Year to all of you watching. Big love. Bye for now and peace.